Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday, happy Aloha Friday as we say on the islands, July 29th, 2016, and this is the Daily Report for Gold and Silver, our weekend review, in which we combine it with trending markets to take a look at the overall scope and breadth of market activity this week, as well as our forecast for next week. First, to gold. Very, very nice, strong rally in the precious metals markets overall. Gold excelling, though, up 1 1/3% at $1349.70. The low on the day is $1325, and the high $1353.30. Of course, on Wednesday of this week, just following the conclusion of the FOMC meeting and release of the subsequent statements, we went long gold. We went long at roughly $1332. Our stops are at $1305. We will talk about our trade in detail, along with how and when we plan on moving our stops up, which should be early next week. And then most importantly, our exit strategy or upside target. Let's take a look at our first gold chart. Absolutely believe we have an excellent trade under our belts. We already have substantial profits on the trade. And on today's show, I want to kind of put these most recent moves into perspective, talk about our upside target, but really first take a look historically of where we came from. Where we came from on two parts is first, we hit a record top at over $1,900 an ounce, but that was a long time ago. This is the mark right here for 2012. So it really happened, about mid-2011. And from mid-2011 up to really the conclusion of 2015, we went into an extremely protracted set of waves down, waves 1, wave 2, this being wave 3. Wave 4 was a compression triangle. You can see that right here. That really was our fourth. Then on our fifth, we had our count like this: 1, 2, 3, 4, and then 5. That concluded a 5, a intermediate 5 behind it, and most importantly, as you know, I have been on record stating that completed an A wave, a major A. And what's so important about a major A is it means we're going into a major B, and that's what this spike up has been. That has been our counter wave to this long wave down. And in terms of straight Elliott wave modeling, typically a B wave will move anywhere between 50 and 75% of our initial A wave. And that's why we have been looking at, in terms of a forecast model, for at minimum for gold prices to head back over 1,400. And here I'm looking at 1,472, and that is basically a 50% retracement of this entire move down. Now, putting that into perspective, now all we want to focus on is this most recent move right in here, in which we have seen the market come from these bottoms at about 1050 to move up to an intraday high of about 1371. Which traders would look something like this. This, of course, is our daily chart. It is in standard candlestick format. And as I said, we do have the market tracking higher roughly at 1349. Now, as I said, we have entered our B wave, and our B wave is going to amount to a bunch of shorter waves. But the count that I've been looking at so far has been something like this: 1, 2, 3, again, a compression triangle, 4, and then we had this fifth wave, which gave us a subcount of 1 in green. You can see that. Now, we had another compression triangle that seems to be pretty prevalent in gold, and I believe that was our A. We had an irregular correction because our B was above our wave 1. So we had our A, our B, and then finally we had our C, and you can see that there is our green 2. So we are now in a wave 3, a green 3, so to speak, in which I believe we have completed the first 4 out of 5 waves. And so what we're looking at with that is something like this. I'm looking at this as our wave 1, our wave 2 here, our wave 3, wave 4, and then I believe that we're currently in wave 5, which brings us to our current trade, in which we put on a trade roughly at 1332, and now we're looking for a genuine upside target. Now, straight Elliott wave modeling, looks at the following facts. Your wave 1 and your wave 5 are typically equal in terms of stature and weight. Let me go ahead and kind of scale this in properly for us. And so really all we're looking at is this. Let's say that wave 1, which is here, let me get the proper pointer, excuse me, but our wave 1, which is here, and our wave 5, which begins here, are equal in length. That would take us roughly to about 1400. And one of the easiest ways to actually do that in terms of an extension is we can simply create what is called a scalable trend line. Let's go ahead and put that up. And so what we'll do is we'll create a scalable trend line from the beginning to the end of that particular rally, and then we will take this, mark this at the beginning, and you will see where we come up with the number of 1437. That is a one-to-one relationship. It represents this particular mark here. And traders, I believe that this wave 5 may contain some peaks and valleys, but overall we will break above $1,400 per ounce. Maintain your current long position. We will look to trail our stops up on Monday or Tuesday. And traders, lastly, before I move on to other markets, I do want to touch on the absolute weakness in the US dollar today, which really accounted for the vast majority of the upside move that we actually saw in gold. Weakening dollar gives it $15 in terms of gains, 70 cents in terms of buying, and that's where we get our 1580. So this was a dollar-driven day without a doubt. Silver also having a very strong week, up about 1% on the day, so not quite the percentage gain we saw in gold, which is unusual as we have seen silver outperforming gold in terms of percentage days on up days. However, we do have gold up about 21 cents at $20.34, $19.97 on the low, $20.40 on the high. Traders, as we said earlier, when we took a look at our gold charts and our current gold position, that the vast majority, 95% of today's upside move in gold is directly related to dollar weakness. We're looking at the dollar index, 95.53. Putting it off about 1.24% on the day, a tremendous move down. Take a look at this weekly chart and you'll get a real sense for what we are talking about. Market trading at the beginning of the week in the mid 97s, closing in the mid 95s. And traders, on the subject of currency, of course, Bank of Japan releasing details on a stimulus package that is about to begin. It's a multi-year package, 300 plus billion US dollars in terms of the stimulus itself when converted from yen. Yen down dramatically, off about 3% on the day, 102.19. And I draw your attention to the left-hand side to this chart that we are looking at, which contains on the top the Japanese yen, which you can certainly see has been really with a dramatic decline in value, and gold really with a opposite effect, moving up as the yen has moved down. I just thought it would be interesting to note. And traders, of course, we have been following crude oil very closely. A dramatic decline this week, although it is up on the day. It is trading at 41.45, and if you recall, over the last month and a half, we have been forecasting a decline in crude oil prices, looking at a target between 42 and 44. We're about $0.50 below that target, exceeding our expectations, and I believe that at this point, if this pressure continues, we're looking at about $39 in terms of the price of crude oil, or I think we'll trade sideways. But I certainly don't see a lot of upside in crude oil through the remainder of the summer. Traders, absolutely no doubt, after seeing the U.S. equities markets move to a record historical high last week. We have seen some backfill this week. Today, we have the Dow Jones Industrial Average closing off slightly on the day, down 24 points. S&P 500 up just a little bit. But when we look at our weekly or our daily charts, we can certainly see that over this last week, we have certainly developed some headwinds at those record tops. And I would not be surprised to see this market not so much correct, but consolidate over the next week or so. So traders, I think we've had a most excellent week here at the Gold Forecast. Of course, we put on our current trade, long gold roughly at 1332. Market looks like it's going to settle somewhere around 1350. We've gone through our upside targets, and as I said, I'm very, very excited about the potential on this trade. When I look at the number of trades that we have done this year and the percentage of profit that we have obtained through the month of July, we're well over a 300% return this year, which matches our performance in 2010. And traders, 2010 was one of the most dynamic years in gold in terms of an upside surge. So it really warms my heart to see that we're back on track for exceptional profits. We have outlined and detailed how we're going to raise our stop. We also talked about our upside strategy in terms of our exit strategy, and I look forward to working with you next week and hopefully watching gold track higher as we make more profits. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.